Hello everybody and welcome to this tutorial. Today I'm going to show you some functions of the algorithm that I've just finished to expose in my previous webinar, divided in three parts in relation to swing trading. This is a video that is really I do with really urgency because since the third video I received a lot of emails requesting information on the algorithm, how it works, what are the things and the values that are represented there. Of course, I cannot do a very in-depth description of all those things because it will take a while. But what I can surely do is to try to roughly give an idea and expose the main functions and parts of this algorithm, that it's composed by a lot of subroutines, but let's say three main subroutines that are then combining together, and they are giving the information that we need for understanding the markets. It's related only on Forex market, okay, so only currency pairs. Okay, so in order to do this, I will use some screenshot that I got from trades that I made just yesterday and the day before. We are on Saturday today, so markets are closed, and for this purpose I will use anyway some screenshots that provide an interface complete so we can see the parts of the algorithm, and so therefore I can describe that for you. Okay, so let's start from the fact. Let me just grab my usual pen for make myself very clear with you. Yeah, okay. Okay, so first of all, we can distinguish that the algorithm, which is called u.U.F.O, which stands for Unconventional Forex Observer, has three main sections, as I was saying, three main modules. One is graphic, okay, and you can see the development of it in the charts. And then there is a second module here and a third module. Let's say that the values of the third module can be these ones, because some of this information of these sections will be reported here, but at the moment is subject of my study, so I keep them separate. Then some of them, they will find place here as a value for the third module, which is the module more detailed of what is going on in the markets. Of course, we have another section here that it's always present, which is about money management. And okay, this is crucial because we have all the information regarding our trading activity and in regards to our margin, leverage, and balance, and percentage of profit or loss, depending here actually is plus 200%, as you can see in this evaluation of the trading that I am running with. Okay, so okay, so we have, as I said, a graphical element, and then we have two main and in-deep panels with values. Okay, so let's stay for a while in the graphical module. Okay, the graphical module basically is a design that starts from a zigzag implementation that recalculates every time highs and lows, of course, of the day. It's all on a daily basis analysis, all this thing. Okay, and then it designs, while the price is composing, levels in this area, this, and this. So here we have all the past, okay, and we can see the behavior of the price through an underlying movement that should be in real the hypothetical straight through, and then we have different projections that are anyway support and resistance levels that in regards on how the price behaves on these price levels, then we can determine the price levels in the way that we normally intend them when we trade. So horizontal lines with, I don't know, 1.1743, like something like that we can understand as a horizontal line. But price is moving following some rules of frequency and oscillation. So when we have to observe it, we must consider other projections, in few words, at least for what is my observation in time. Okay, so this is a visual aid that it's quite useful the moment we would like to understand, once we have decided that, for example, now we are on euro dollar, okay, and let's say that here we compare. Of course, we see here we have euro negative, strongly negative, and dollar positive, okay, strong. So in this case, I am observing as a secondary chart, because the trades were others. I'm observing euro dollar, so I understand the euro dollar is going to be sold. Okay, and of course, all the times you can see here we have in this panel also with the setup, we have some information about the day, the hour. So these are all data that you can always, as usual, I invite you to check by yourself if they are corresponding charts, price values, whatever. Okay, so yeah, by understanding this and deciding that in regards to euro dollar we should sell, and in fact here, look, my algorithm got me a sell level exactly here, okay, and I got sell, and then it identified again another level which it entered with other sell positions, okay. And then this, as you can see, the moment the price came here, automatically these lines were starting to reshape and regenerate in order to provide me the idea that when the price is doing this action, okay, and now it's tending to, so it has a behavior towards these levels that we can see them as support and resistance, and these levels will not change if you change the time frame of your chart. Now I made a bit a mess with the numbers, but let's see maybe with the next screenshot what it's going on, just to give it a detail. Yeah, here we can see the price moving with the line of the close. Let's grab another example just to show you what is about. If we see here, for example, if we see, for example, here we have another currency pair, the GBP CAD. Okay, the algorithm was providing me in the day of Friday, and a continuous shift between GBP as a negative, with negative values, so in order to be sold, and continuous shifting between New Zealand dollar, Australian dollar, and CAD, yes. So that was a kind of bumping. So for each and every one of them, the algorithm opened, in this case, one trade. And as you can see here, there is another example of how this graphical, because we're still in the graphical example of the first part of the algorithm. So what is graphical? The lines that are built, and they proceed with rules of geometry, but geometry applied to the Cartesian planes, not to horizontal line, because if we see the things this way at this moment, we have price and time, but there is no relation between price and time. If we correlate base and quote, then other things are coming out from the box, you know. So in this case, it's more proficient, you know, to observe the price moving accordingly to also other possible ways to identify. In fact, let's see in detail that, for example, in this case, price has been rejected. Let me just choose, I got another, yeah, has been rejected from this level, which has arrived, has been rejected, and then started to follow the path of this line, following, but then detaching from this. So when it's detaching, what I can guess, that is going to hit probably this level, but this level is the intermediate level between the top, ideal top of expansion or progression, and ideal bottom. So we can see them as a resistance and support dynamically. Okay, so in regards to how the price will behave in this area, if it will fall down and then retrace and then fall down, we can expect, you know, some few forecastings. And if we are about to sell GBP CAD in this case, we will always wait for the price to retrace at the tops of when it has broken the levels. In this case, probably the movement should have been in the same candle, okay, because here we are observing the graphic in 30 minutes. And as I told you, if we change the time frame, the graphic that it's painted is still the same. So if I go to the next chart, let me check. Okay. Yeah, okay, here we have at 5 minutes, and at 5 minutes you see is the same movement of the price that was described with candles, but in real we have a more precise projection of the lines and how the price is behaving. Okay, so this is, oh, there are also two channels that are painted. Let me just do this, and maybe you can see them here. Let's see in this frame, which is this gray that goes from here and proceed and proceed and proceed and proceed and proceed, and this one that it comes from above and it goes this way and then proceed. And of course this channel is quite straight, so we can see also here there are levels that then can be broken, and if it's broken then it's more likely to still go down. Okay, so even these channels are somehow calculated in this day and in the day before. Okay, and they are normally channels that are not represented with the normal indicators, as far as I can have my experience. There are also some important levels that are explained and projected in the charts that regards the movements of the day before. That can be relevant in terms of analysis and study, and that if we can see they represent an area of support and resistance of the price, we can always put that information in relation of what we have from the section that suggests how the currencies dynamically interact between each other. Okay, so this is clear. This is a graphical aid for positioning, understanding if the market is going towards certain levels that we can rectify, and it's good to use after having an understanding of what is going here. Another little feature that I discovered and I implemented in this algorithm is the fact that if you see these bars, this red bar here, they appear only in certain moments. When they appear, it means, in case they are blue or red, they can be red or blue. In this case we have red. Okay, so for the blue is the opposite, of course, of the red. Very simple. That when it happened this way, it means the price is going to go down, but after a retracement that will have at least this entity, this magnitude. And in fact, when the price arrived here, this red bar appeared, and we had the retracement till this level. Then it went down again. When it arrived here, it said we can have a retracement till this area, and it painted another red bar. And what we had a retracement till about this level. It's quite enough precise. Okay, and they appear when there are price accelerations that are significantly in the direction of the pairs that we are trading. Okay, and I thought it's something that it happens very frequently this way, so I thought to put also this in the visual aid. That can be very important. Other than this, there are also some indications like, you know, this arrow, and that represents values that we can see here for making it easy to correlate our analysis. Yeah, that's it. And that's complete what is about the visual aids that are coming from this algorithm and from this specific module. Okay. Then we have, as I said, two other modules. So this one is basically the recap of this plus this, that they are just one big module, and this is the recap. Basically, if you see in this case prices that are selected, currencies, sorry, that are selected are GBP and New Zealand dollar. And as you can see here, we have GBP minus 328 and New Zealand dollar is 227. Between these currency pairs only, so excluded USD and Euro, this is the strong, this is the strongest, this is the weakest. And they are exactly reported here with their values. But they are also associated to the power of the strength in the whole market of euro and dollar that are behaving in this way as we saw. But they are also interacting with the other currency pairs by the laws of purchasing power parity and correlation. Okay, so basically with these numbers, we can have already made all our hedging strategy for the day. But these values must be enough strong in order to confirm a trend. If they are like Swiss franc 9.3 or CAD at this moment minus 6.8, it's just consolidation phase, a moment where the markets have no opinion on that, so it's better to leave them. But in this case, we have only the possibilities that are coming out from a narrowed selection of euro dollar and GBP New Zealand dollar in this case. Okay, so also now I'm adding another section which is experimental, where all these values, let me just briefly cancel so then you see what I'm talking about. We have here the main section with values, but some values are negative or positive, but we also need information if they are decreasing or increasing, because if they are increasing and they're positive, they're strong, but if they are positive and decreasing, they're getting weak. Makes sense, I hope. So we can observe them for a while and see if they are decreasing or not. But as our attention through our trading hours is not always focused on a panel only, this section basically provides the previous data and the even previews before data. So we have three values. So -2, sorry, let me just remake it better. In time, let's do this. In time we have the -1, if here is time, we have time -2, -1, and now, or 0. So by having 450, 449, which is always close to that, and 453, we see still that the euro is going down progressively, and as well as USD is stable. But let me see if there are other situations that I can compare. For example, Swiss franc, look at this. Swiss franc was -2.7 negative, let's say 2 minutes ago. Then 1 minute ago was +14. Now is 9. So it's like a kind of thing like that. We don't want this a currency that behaves this way. We want a currency that behaves or this way or this way, one of two, because this is strong and this is weak. Okay, and this is uncertainty. So when it's uncertain, we get rid of that. These ones we can keep. This one it's too weak signal. And we have GBP as first one weak and USD as first one strong. Then we have secondary, because it's in the group of the euro dollar, we have the euro weak, and then we have as a strong Australian dollar and New Zealand dollar. That's it. So these are our second choices, these are our first choices. This is the selection that every day we should do in the Forex market. Okay, this is done by all this calculation. And here is the simple recap, only running in the background the same subroutines, but only providing the final sentence that makes easier to trade. Okay, so finally we have also another sections that are very good for this aid, which is this, where we can see in regards to the currency pair that we are analyzing now, so base and quote, the maximum and the minimum of their oscillation that is registered and keep in analysis, and their medianic balance. So therefore here I have an information, for example, that the base, which is GBP in our case, because we are in the chart of GBP CAD, so our base is GBP and our quote is CAD. Okay, we can see that the base, so GBP, has an oscillation between 0 and -361 as a minimum, and actually is at -328. Okay, 328, the values are the same. And the CAD, which is the quote, has an oscillation between +182 and -86. So potentially the average is around 47. Okay, and actually the quote is at -6.8, but it's having a different oscillation. This one was always negative, this one was sometimes negative, but revealed more positivity and strength. Therefore, if the CAD is strong and GBP is weak, we can only expect this, right? Okay, this section of corrections, I better not to say anything because it's just some experimental values for the next upgrades of the information. Probably only one mention, this element will be integrated in this panel somehow. So, but anyway, the 99% of the things are exposed now properly. Okay, so this completes the three main sections of this algorithm. And as a final note, let's see. See, tack, tack, tack. This is the way it behaves. Okay, so the final note. Okay, let's just make you understand. When the order is injected by the algorithm, it passes a pending order. Like in this case, we have GBP CAD. Oh, this is not, you won't see this. We have GBP CAD, GBP Australian dollar, GBP New Zealand dollar, and Euro dollar. First of all, you're not obliged to follow all of them. You must analyze how the market behaves, and if it's properly, you enter them. Otherwise, maybe you can choose only one of them, which one is the more profitable, or the one that you are just entering, because some of them, they can be already in development. So it's very important, this. And this comes with a bit of experience with the analysis of, and not always it's successful unless you practice a bit of discipline and you accept to trade only the currency pairs that are representing a certain level of value. Okay, this is very crucial. Anyway, then the moment that the conditions are ready, the expert advisors generates a sell or a buy order accordingly. So in this case, we have, then I decided to use it on the euro dollar with more gravity, because in my opinion that was the most important trade I could have made that day. Okay, but that's subjective, I can't decide that. And the prices are all injected at this moment, because this is not a fully automated robot. This is not intended as automation for trading, because these orders have no stop loss and no take profit. Okay, this is crucial. You use this algorithm in a semi-automated way. So from 30 and more currency pairs charts, this algorithm narrows to two currencies, currency 1 and currency 2, and which is one pair basically, so one pair, and other two couple if they are, because it could be that, for example, we saw euro dollar that way, it could be that euro dollar is not moving. So in that case we have a narrowed and a limited operativity. We have to wait for the markets to express, to increasing momentum, increasing volatility to enter them. Okay, but there are other two currencies that can be put in relation, and with all the theory that I explained in regards to hedging, they can be combined in order to generate the orders of our portfolio, buy plus sell, as I was explaining in my videos before. Okay. So therefore, if we operate then with stop losses, I received some critics, and I thank you for those critics, about stop losses and take profit. I also put stop losses at a certain moment. And I also put take profit in certain cases, but not always, because sometimes I just take the whole profit and I close the orders and I'm not there anymore. But if I know that because of the values that I see filtered in my expert advisors, that for some reason that currency is going to really behave that way, unless events that can drastically, but is going to behave. But I have a perception of movement that can go against my trade. I can establish a level of stop, but I have to hedge it first. So the hedging is what is balancing the equation. If I put a stop loss and maybe I get a tight stop loss, I cannot go into something that can completely destroy my equation. The reason is that if there is too much drawdown, in that case, the order is wrong, so you close it immediately. Because what I'm saying here is that you don't have to intend this like a robot that goes by itself and then you can leave your trading basement, the trading desktop. It's for traders that are meant to trade actively and monitoring, first of all. And even if there is no stop loss, it's also for the reason that anyone has its own way to place the orders, to place the stop losses and the take profit. So activating a pending order is just the basic aid that must be in that case, because in our panel we will see only activating these currency pairs. And as in the expert advisor, we can ideally start, to run on the charts and let it go freely with an automation. For this reason, this is very good because I have already created my orders. Then immediately, because it takes some time before they are activated, immediately I open the charts that are related. I do a quick analysis because already the price is developing and I have to see it in the optics of the fact that by calculation the outlook is on a sell direction. So when I analyze a graphic that has any kind of movement and it's said that is on sell, therefore I will analyze support and resistance accordingly to a sell pattern or a sell projection. That makes me more easy because I know that there is more probability that the price is going to fall because of these projections given by the comparison between numbers that describe the market performance of those currencies. Okay, so I have my own way of trading, and if I think it's necessary, of course I can put a stop loss. And it depending, for example, when I trade only one or two currencies this way, I put a stop loss. But when I trade more and they are hedging together, giving them something like this, and even if some of them they stay negative for a while, for me is I'm more concerned about the oscillation of the price that I can detect by the graphical, aid that my algorithm is building at every movement of the price. And in that sense, I will consider the movement. But if I enter an order, is not to lose, to have a loss. So my first stop loss is the narrowing from all these charts to 2, 3, maximum 4. This is my approach to trading, and of course is a risk, but even in other conditions is a risk. And we have to understand what kind of trading fits our personality and ability to stay calm. But there's nothing wrong in having a pending order activated that anyway can be at any time instantaneously created, also with a stop loss and a take profit. Okay. This completes this tutorial. So this way I hope that the majority of you that will see the previous video that shows the performance of a couple of trading of a couple of days gave at the end. Now they were wondering about the sections of the features of the expert advisor. I hope that with this video they got all the information that are necessary to have a better understanding. And also for those who have already this, is just a little tutorial that somehow will help. Okay, so have a good time and space as usual, and enjoy the weekend, and let's talk soon for those who are interested as usual. And I received emails, but I hope this time not with questions about how the algorithm works, but maybe other questions. Okay, bye, have a good time.